Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, at present, the Australian dollar holds to a positive stance after the Reserve Bank of Australia surprised its interest rate hike by less than 25 basis points, that is from 2.35% to 2.60%. From the move, the bulls for the Australian dollar continue to show their presence. After the up challenge didn't quite get to its target of 65.65, but nevertheless, I like the way this pattern holds to a positive picture or pattern, and therefore could see further guidance to the upside if we see a break of 65.65, as this would lead towards 66.85. With any pullback, I see support at this time around minor at 64.60. Moving on to the euro, the market is currently challenging this downtrend, well, more to the fact, the yearly downtrend. As we can see here, it's very much a very strong downtrend that emanates from back in early January, and a break or clearance, that is, of the level seen at 99.95 or New York close could give further upside potential. Now, I did say this morning that we could see a move up towards the 104 region. The reason behind that is the dollar index, which measures the greenback strength against a basket of 6 major currencies, has continued to struggle to recapture its momentum since posting the highs or 20-year highs around 114.71 as it drops overnight from the region of 111 down to 110 figure, and currently holds around 110.28. As you can see, I do like the pattern for the euro and therefore could easily take the challenge beyond 99.95 and up towards 100.60.65 or even up towards 101.25. The broader picture is 104 if we do see the break of this 10-month, say, downtrend. Any pullback, I see support around 99.15.35. The price action for dollar yen was a little bit weaker in terms of the fact that the market last 3 days is backed away from this 145 level, but not overly convincing, that is, due to the fact is that the technicals are broken down, but we still need to see further weakness, and that is a break of 143.70. That would give further guidance down towards 142.60.70, where I've outlined here before profit taking coming back into play. Do note that a break above 145 may actually see another round of intervention from the Bank of Japan, and therefore, like we saw recently from this whipsaw price action, or more to a point of being a potential spinning top, that is, we could see the market take another severe downturn. Sterling still holding to its bullish trek and now looking towards 114.55.70 as a potential target, which is where we are now. Now, I am somewhat a little bit careful with my next call, but still, for those trading, we could see a further rally if we close above 114.70, and that is up towards 115 to 118 as a potential target. With any pullback, looks to support, which is much lower than 114.10 to 113.45, where I feel the bulls may come back into play. Talking of bulls, they are cheering as the market reaches its topside objective of 1,730 to 34, or quite close to that, around 29. Nevertheless, the market is not backing down, and as the dollar still remains somewhat weak, ahead of the non-farm payrolls number for September, with the forecast estimated around 260,000 jobs added in September, even though the market may see a slightly weaker number from the previous month, that was at 315,000. If we do see a weaker number, well, the market may find that a little bit challenging for the dollar and therefore could push the gold beyond 1,734 and up towards 1,750-56 area. Wrapping up with oil, well, the market's not backing away and still looks towards this $86 figure 45 objective. Now, if we see a break, which could actually be potentially on the cards, looks towards 88.80 as a target. Well, that wraps it for today. Thank you very much for joining me. And as always, do have for the intraday report, and I hope you enjoy the rest of the day.